Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking energies, we have to talk crude oil, which was down again, another negative session, although far less dramatic than yesterday. Yesterday was the biggest down day we'd seen in about 3 weeks. July 17th was the only day recently that matched yesterday. We've had a couple of days like that, 3 to be exact, in about the last 6 or 7 weeks. Just high pressure down days. And when you look over at a daily chart, you're seeing an equal number of up and down days, but the down days are much more exaggerated. We had a high today of about 67.41, settled at about 66.70. That's down about 36 basis points, or right in between 1.25%. The low was 66.49, not quite exceeding 66.32, which was yesterday's low. So that's one positive sign people could potentially take out of the price action we saw today. There was some pretty big Iranian pressure. We're not really sure which direction that would take the market. Iran has asked for a special OPEC meeting next week to address what they see as non-compliance to the OPEC production cut agreement. They mailed a letter to their counterpart at the UAE saying essentially that OPEC members were overproducing to soften the blow for the U.S. sanctions. Now, they didn't use those exact words. That's my opinion of what they wrote, but they're basically saying that OPEC is not really standing next to its members of the consortium by doing this in order to soften the blow of crude oil prices, with Iranian oil potentially coming off the market with the U.S. sanctions. This would be a very big deal if we had this meeting, because you don't know what direction the results of the meeting would come out on. Would OPEC announce another sort of increase of production and put more pressure on what's currently a weak market? Would they basically tell Iran, it's too bad, that's what we're doing, potentially putting a floor in the market? We don't know. We don't even know if they're going to have the special meeting, but it was a big point. It was a big talking point in the energy markets today. And then lastly, the dollar. We look assured at a third straight positive week for the dollar, although it was only up a little bit less than 0.5% today, and that kind of helped keep a little bit of pressure on crude. Any rally that was trying to gather steam would get pressured by that inverse relationship between the dollar and crude oil. So crude oil kind of quiet, but overall it was a fairly status quo day considering the sell-off we got yesterday. This is Bob Iaccino talking crude oil futures from the CME Group trading floor in Chicago.